Let's go ahead and get started. Watching, I'm going to go ahead and give you the floor. Let me make sure you're spotlighted for everyone.
I am. I see myself on the spotlight.
All right.
So I'm going to go ahead and share my screen. Danny, do I have the ability to share?
I will give you the ability right now.
So while Danny's doing the tech stuff, so I'm going to give you all an overview of how I think about finances and like success around finances. I know that today you all will be specifically focusing on retail banking. And so there's a portion in the 5-step kind of money plan that I lay out that focuses specifically on saving and like how you would utilize a retail bank. And we go through some tips around things you should be thinking about before you start working with retail banks, during working with retail banks, and after. And so if you have any questions, whether it's about me specifically or about the presentation, again, please feel free to drop them in the chat, and I will answer as many of them as possible. And then also we will have a Q&A at the end. So I'm going to share my screen. Let's see if this version works. Are you all able to see my screen currently?
Yes, we are. We're all set.
So I'm going to focus on 5 rules of the money game. And for those of you who I have not met, my name is Watchen Nyanue. I was born in Liberia, raised in Chicago. I lived in New York for 7 years and then moved back to Chicago in 2013. I went to DePaul University in Greencastle, Indiana as a member of the Posse Foundation, so the first class out of Chicago. And Posse is a full tuition leadership scholarship that you get nominated for in undergrad, and they pay for all of your college tuition. And then for graduate school, they also offer assistantships for that. And that's how I know Danny, because we went to undergrad together. I'm in the process of finishing up my MBA at the University of Booth School of Business, which is here in Chicago. And then in terms of my professional background, my background is in strategy and marketing. I currently run my own company. I run a career development agency that works specifically with large corporations. So corporations like Nike and Best Buy and Walgreens, to do professional development for their Black women employees specifically. So as they try to think through what they need to do as organizations to keep high performing Black female talent, we work with them to come up with some programming, whether that be workshops like this one, curated events like the Career Summit that we had last week, and then also digital resources like the podcast and a bunch of other things that we do. Prior to running my own company, I worked for companies like Comedy Central, Hearst Digital, Yahoo, Johnson Publishing, and then my most current past corporate job was as the Vice President of Marketing Partnerships for the WNBA team here in Chicago, the Chicago Sky. And then, as I mentioned before, I currently run a career development agency called I Choose a Ladder. We work nationally, but we're based out of Chicago, Illinois. So let's go to the 5 steps of the money game. And some of this stuff may seem a little bit basic, but I want you all to, if you know this stuff already, the question that you should be asking yourself is, how good am I at this? Not, oh my goodness, I already know this, because some of this stuff will be refresher for you. And then some of the other stuff you may be hearing for the first time, which is fine, right? We all have a different relationship to money and how much we were taught about money growing up. And so it's nothing to feel guilt about. But the first step of the money game is to earn money, right? And it's not to earn money to a place where you are just kind of surviving, right? How much money do you actually need to live? Have you sat down and put a number to that? Yes, we know what you currently make. Well, you know what you currently make for your salary, but what do you actually need to be making in order to support the lifestyle that you want to live for you and your family, right? Once you have an understanding of what you currently make, what are your current expenses? And I don't mean this in like the terms of like everybody needs a budget. I actually don't have a budget. I have categories of spending, but what are your current expenses? And then outside of like what your current expenses are, based on what you earn, what do you need to be making in order to be able to start to invest in your financial future, right? So if right now, and this is again, no judgment at all, if right now all you're making is enough to support like your basic needs, thinking about investing is going to be a lot of stress, right? Because it's just going to remind you of a deficit of like, I want to do this, I have these aspirations, but the math ain't mathing, right? Like something's not adding up for this. And so it's to think about having a clear number. Here is my monthly income. Here are my monthly expenses. And if there is a gap, what are some ways that I can start earning more money right? And for some people, it's like, well, let me get a second job. Before I started my company, I was in marketing. My background is in marketing and strategy, like I mentioned, and I wanted to make more money. So as opposed to getting another job, I thought about like, what skill sets do I have that I can consult with other people on? So let's say, are you a great DJ? Are you a great writer? Are you someone who's good at organization? Are you right? Each of us has a skill set, especially if you are a whole grown adult who's been working for a while. It may be a skill set that you take for granted, but that other people would pay money for. So if you realize that you want to invest, but your earning right now does not meet those goals, think through what skills do you have that you can charge people for, that people are willing to help you fill that gap. So the first part of the money game is that you have to earn enough to be able to pay your bills, but then also set aside a little bit for the future to start investing, which starts with savings. So the next part of the money game, right, is actually saving. I know that in our culture, we make money, we spend money, and then whatever, if there is anything left over, we then decide that we're going to save, right? It's actually the opposite that should be happening. And I think for a lot of us, we feel like if we don't have a lot to save, then saving is not worth it, right? But savings is first a habit. So it's a mindset shift before it becomes something that grows. Also, in terms of money, the thing that you have that is your best friend in growing wealth and investing is time. So initially, it's about you creating the habit of paying yourself first, even if it's $10 a month, right? It does not have to be thousands and hundreds of dollars. Create the habit of putting something small aside for yourself every month, right? That you then put in a savings account, right? With retail banking that we'll talk about, and you allow compounded interest in time to let that money grow. You also need to have a goal in mind of what it is that you want to save, right? So they say 3 months, 6 months. For a lot of folks, it's like, if I'm saving $10 a month, the thought of saving for 6 months, right? It seems overwhelming. It doesn't seem like it's worth it. So you decide, what is the goal that you are saving for? If it's to buy a property, right, and you have that level of income, that's fantastic. But if it's for a vacation for you and your family, that also works as well, right? And then you also want to name your savings goal, right? What are you saving for? And so for me, I'll say, this is my vacation account. This is my education account, right? So that the money then becomes real. It's not just stuff that I'm putting aside just to be putting it aside. There are actual like real things in my mind that are associated with that money. So like when I'm in the process now of thinking about buying a place. Well, I have a house savings account that I've been saving in for years, but it's named my house savings. And so I knew where the money was going if the time came, and I knew how much needed to be in that account in order to get the type of home that I thought I would want to live in. The part that we'll talk about is saving, right? So once you have an idea of what it is that you make, you also have an idea of paying yourself first, right? That's saving. So then when you start to think about saving, one of the things is, what is the best place for your money? I know a lot of times we're like, oh, just put it in a savings account. And so if you have a checking account with Wells Fargo or Bank of America or whoever, you're like, okay, let me just keep all of my money in one place and then save it. Sometimes that is not the best place for your money, right? And so as you start to think about retail banks and where you want to keep that money that you're saving every month, regardless of how small it is, here are some things to consider, right? Are there fees associated with the account? For a lot of the larger banks, there are minimum balance fees, right? And then there's also like annual or monthly maintenance fees. Well, that's not really how you don't want to be saving money to be paying fees. So looking through what those fees are. The second thing is, are there minimum balances, right? If you're starting small and growing your money, you don't want to be penalized and losing some of that money because there are minimum balances that until your money grows, you may not be able to meet every month. And so look through the minimum balances. The third thing is interest rates. So I used to have a savings account at Chase, and I realized it was like getting no money. There was no interest. The money wasn't growing. I think in 8 months, I gained like 3 cents or 4 cents or something like that, right? And so for me, it was finding a place where I could put my money where it could grow at a higher rate. And so I went from the traditional retail bank to an online savings account with Goldman Sachs. And like the interest on the same money is growing. It's accumulating a lot faster and a lot more. How will you be depositing money into the account? So if you want to do an online savings account, you would not be able to deposit a bunch of cash into it, right? You'd want to have a traditional retail bank that has traditional ATMs and all those things because you don't want to be paying ATM fees. The other thing is like how frequently will you need to access the money? So depending on the bank that you have, if it's an online account versus a retail bank or a neighborhood bank, you may be able to get your money out quickly, or for some banks, like for me, it's a 3-day transfer, right? So if it's cash that I'm going to need access to pretty immediately, that would inform where I would put my money to have it grow. And then how frequently do you need to access the money, right? Like, is it going to be in and out a bunch of times? Which if this is a savings account, it really should not be going in and out. It should be going in and only withdrawn for emergencies or the purpose that the money was put into the savings account. But again, how frequently will you need to access it? And then to spend, right? So once you've saved, you've paid yourself, then you get to spend money, right? Because you've already paid yourself first. One of the things that people say all the time is like, live below your means, live below your means. For someone like me, that doesn't work. So the way that I think about spending, and it's Ramit Shah is the person who introduced this concept. But for me, I have 3 areas of life where I'm always going to splurge, right? For me, it's food. I love food experiences. It's travel. And then it's like shoes. Those are my 3 areas. And I don't feel guilty about spending money in them. For everybody else, it could be something different. But then I cut mercilessly everywhere else. So I don't spend a ton of money on where I live. I don't spend a ton of money on clothes. I don't spend a ton of money on bags. I don't spend a ton of money on makeup. I don't spend a ton of money on going out, right? Those are not areas that I've prioritized. So as you think about your life, what are the areas that mean the most to you that you're going to give yourself permission to spend on? And then the rest of your life needs to be very, very conservative in how you spend money. And then the third part around your spending is what boundaries do you need to set so that you don't spend more money than you were supposed to. And for this, I feel like it's the hardest for us, especially as a Black community, because we are community, right? We help people out. We are people who give. We are generous people. But part of building wealth is to also not overspend so that you're always digging yourself out of a hole, because you need that excess cash to then actually invest. And then investing, right? That's the next part. When people think about investing, a lot of times it's stocks, it's bonds, it's all of those things. What I found is that there are safe ways to grow your money that don't necessarily have the volatility of like individual stocks, right? So your investments only become a priority after you've shored yourself up for any immediate like life expenses. So if you don't have enough saved to take care of your life, investments should be something that you're researching, but maybe not necessarily something that you're actively pursuing, because investments is a long game. So if you're investing for 5, 10, 15, 20, 30 years, right? And so you won't be able to pull out that cash in the same way as you would from your retail banking savings account. I said this before, the biggest factor in growing money is time. So the sooner you can get started with putting money away, whether that's in high interest or in actual investments, if you're at that stage of your financial growth, then you want to put the money in as soon as possible. And then some simple low barrier to entry ways to get into investing. So if you have a 401k, make sure you are maxing it out to where it's matched. You can have a traditional IRA, you can have a Roth IRA, and then there are index funds. And then one of the things that I have is a target date fund. And target date fund just says my target date of retirement is this year. And so then Fidelity, who I use, they invest accordingly. So they're more aggressive the further you are away from retirement, and they're less aggressive the closer you are, because they don't want to take risks with your money. But that is something that you would talk to with your financial advisor about what makes the most sense for your life. And then I would say the last thing is to protect your assets, right? You need to look at how risky your investments are, right? Because as you get older or closer to retiring, you don't want anything to happen if you're in the market where you lose a huge chunk of your 401k because you are investing so aggressively, or your stocks or whatever, that you lose a huge chunk of money because your risk profile was too high for where you are in your life. Life insurance, right? That's a huge way to make sure that your friends and your loved ones and your family are able to do what needs to be done in the case that something happens. And for a lot of others who don't look like us, it's also a way to pass on wealth. And then the last thing is estate planning, right? So even if you don't have a lot of money, if there are things that are of value to you, right? Home, jewelry, anything that you want to pass down, making sure that you have those things legally in writing so that you can protect all the things that you've been growing over the course of your life and your career in the unfortunate event that something does happen to you. And then I think that's it, Dean. I know I was only supposed to be 8 minutes, but now I'm at like 15. So I'm going to turn it back over to you.
Okay, thank you,
Whenever you're ready,
Danny.
Maureen.
Thank you, Danny. So
You're
welcome everybody to our third session of retail banking. As we introduced today, we're discussing retail banking, and I'll be demonstrating how to pay a bill and how to add a payee. So I'll introduce myself. My name is Maureen Baidhi. Next slide, please. I'll just go according to the slide so we don't get confused and take more time. So I'm a mother of 5. I came to Canada over 16 years ago. I have a Bachelor of Arts degree in Organizational Studies and Philosophy. I have certification in Certified Canadian Securities. I have a degree in Supply Chain Management. And I have worked with one of the biggest banks in Canada, Royal Bank of Canada, for over 10 years in all different capacities. So I know a lot about banking. Next slide, please. So we're gonna dive right in. What is retail banking? Retail banking is offering banking services to retail customers instead of corporations or institutions such as companies. Retail banking is sometimes known as personal banking. Basically, it is banking that you do for yourself. As we said, it's banking like your daily transactions, your daily banking, what you need out of your money, how you put your money in the account, how you open an account. This is retail banking. It's different from company banking. Next slide, please. So retail banking includes a lot, but we'll go just discuss just a couple of them. One of them is personal accounts. So in retail banking, we have personal accounts. There are several of them, especially with Royal Bank. I'm going to talk about Royal Bank in particular because I have worked with it for over 10 years. So there are personal accounts that you could use if you want to do your personal banking. So there are checking accounts and saving accounts. We will dig deep into these later on as our sessions go by, but for now we're just doing an introduction so you know which accounts we have and the introduction of it all. So there's checking and there is savings account. And then in retail banking, we also have lending. For example, we have personal loans, and these loans include student loans. For example, if you want to go back to school and you don't have enough money, maybe you haven't saved enough money, maybe your parents can't support your school, not because they don't want, but maybe because they don't have the money at that particular time. So you get a student loan. This is part of the lending in retail banking. And then they also example of car loans. And let's say you want to buy a car and you don't have money, you come to the bank, they lend you the money, you go buy the car, and then you pay in installments until it is all done. So there's also line of credit. A line of credit, this is a loan sort of that is given to you for you to use. It's different from a Visa. This is like a different account where you could go to the bank, you could withdraw money on it, you could pay bills with it, but you pay back at a lowest interest rate. And also home equity loans. For example, if you have a home and you're short of money, maybe you need it for vacation, maybe you have a medical emergency, maybe whatever you want to use it for, you could get money against your home as an equity, like the equity you have in your home, you could get a loan against your home equity. And then there is overdraft protection in lending. For example, you have a personal account, you have a checking account, you have a savings account, but maybe you're paying bills from that account, but maybe when you want to pay the bill, you don't have the money at that particular time. So you ask from the bank for an overdraft protection. So they'll check your credit. Most banks do, like Royal Bank we used to do. We check your credit and we offer you the overdraft protection against your account so that when you have, let's say, bill coming in, it's pre-authorized, and there's not enough money, your overdraft protection covers it, and then we charge a small fee at the end of the month. Next slide, please. Also, it includes the debit card. For example, Visa debit. It has been introduced for a couple of years now. There are some people who don't qualify to have visas because of maybe their credit, because of all sorts of things. So if you have a Visa debit, it could help you do your online your online shopping, but then it's using the money right from your account. And also the client card. You all know the client card. You have to use it at the ATM, at your grocery store. If you need to pay for anything, you could use your client card. So under these all, we have different types still of client cards and visas. For example, Royal Bank has different client cards according to their clients. Most of you know Royal Bank as like you have a blue card, but there are some people who have gold cards and black cards. All are for personal banking, but it depends the type of client. For example, Royal Bank, they do the black or gold. These are clients who are like high profile. I don't say that everyone is not high profile, but these are clients who bring a lot of business to the bank. Let's say they bring the bank a lot, they have a lot of money in their accounts, they are given that priority. That's why you see them with black cards or gold cards. So next is mortgages. This may also include home equity and then line of credit, and then e-banking, which could include e-transfers, email transfers, online banking, and then telephone banking. So telephone banking, let's say you're somewhere, you can't access your online banking, you can't get to the bank, you could just call the bank. Especially, for example, Royal Bank, you could call Royal Bank and say, hey, I want to pay this bill, or I want to transfer my money to this account, there's a bill coming out, and I'm afraid the money won't be enough. They'll do it for you, customer service. That is telephone banking. Next slide, please. So, as I said, we have different types of accounts, but today we are going to focus on two accounts. That is the savings and the checking account. So how are you eligible to have these accounts? Because not everyone can just walk into the branch and say, you know what, I want to open up an account. So anyone can have an account unless denied by the bank, for reasons that they will tell you exactly, because when the government of Canada expects the banks, or it is in compliance, the bank has to disclose as to why they have denied to open for you an account. They have to tell you, and it is in writing, they give you a paper. So mostly they deny people accounts because of terrorism suspicion, maybe money laundering and drug trafficking. Those are the major ones that they would deny you an account. But not everyone can also open an account. As I said, you need to be 18 years and older to open an account. And if you're below 18, you need a parent, a guardian, or a guarantor. And then identify the account you need. You can't just walk in and say, I want to open an account. Definitely an account manager will sit with you and they will go through all the different types of accounts. And then you will see exactly which account suits your needs. The account manager may also guide you accordingly, because you may say, you know what, I want this no limit banking account, which charges like $30 a month. But maybe you're getting $100 a month. Why would you want an account of $30 that are going to charge you? So the account manager, it's their burden to explain to you exactly what the accounts entail and what you may need, but then it is totally up to you to decide which account is best for you. Next slide, please. And then requirements for opening an account. Yes, you've walked into the branch, you want an account, and you've specified exactly what account you want. There are requirements to open an account. So 2 government issued IDs. The government issued IDs could be a passport, your driver's license, your social insurance number, but that's optional. Usually they don't ask for it. It's optional. So it's up to you, but usually these 2 work really well, a passport and a driver's license. And they may require proof of residency. For example, your lease, if you have a signed lease for your home, if you don't have a signed lease, maybe you would show your, if you have a home, your property tax statement, just to make sure that you are giving them the right address where they may send you, let's say, any communication, any mail from the bank, So you show them a bill with your name, let's say your gas bill with your address on it. And then for the loans and visas, mortgages, insurance, and investments, the requirements are totally different because these go really into depth. You can't just walk in and say, oh, I have my driver's license and a passport and I need a loan, or I need a visa, or I need a mortgage. So, but as you go into the branch and sit with the account manager, they will explain to you exactly if you want a loan, what you need to bring in, so they start the process. And then e-banking, you will need an email transfer because this is part of banking. If you want to do e-transfers, you will need an email registered in addition to your personal identification. For phone banking, you'll need to identify yourself when you're calling in. For Royal Bank, I know if you registered, they have a voice identification, so you don't need so much of a, IDing yourself. But you need to identify yourself. They may ask you questions, customer service. They may ask you questions as according to your account. They may ask you questions, when did you last deposit, how many payees you have, just to make sure that they are talking to the right person and just to safeguard you as their customer. And then you don't need to be working to have an account too, because some people, especially in our communities, they don't know that, oh, I'm not working, why would I need an account? You don't need to be working. Maybe you're a student and maybe your parents give you some allowance and you need to start saving and putting away a little bit what they give you. So you can get your account and you start depositing money in there even though you're not working. Next slide, please. So you should have clear reasons for having or opening an account, because most accounts have fees and others don't. So you should know which account really works for you, and you could open that one. And then identify which one clearly meets your needs by either visiting the bank or the bank's website, or sometimes you can call in to Royal Bank and they will advise you accordingly. So Royal Bank, for example, has accounts like VIP banking account is for $30 a month. It comes with unlimited transactions, unlimited banking. If you think that works for you, then you should be able to get it. And then there is one which is common and most people have it. It's the day-to-day account, the day-to-day banking. That's for $4 per month and with 12 free transactions. And if you go above the 12 free transactions, they charge you $1.25 per transaction. And then youth and students, there's a Leo account. These ones have no monthly fees, but they give you up to 15 transactions, and there is a fee $1.25 after the 15 transactions. But this goes up to 14 years. But recently there's an account that has been introduced for anyone after 14 because they're trying to target students who are going off to college, who are going to become their, I would say assets in the future because they want to keep you. So there's one that has been opened, it's called Advantage. So it's, you don't pay any fees as long as you're 14 and above. So I'll go to slide 9. So RBC Advantage Banking, that's another account. For this, yes, I've just explained that. And then you have to agree to the terms. After you decide on which account you want, they'll open the account for you. They'll give you documents that you will sign that I agree to these terms and conditions, because basically they don't want you to come back and you're suing them, or I didn't understand this, I didn't know this. And then they'll ask you, of course, if you have any other questions. So you will sign, and then there you are, you have an account that you have wanted, and you start saving money and depositing money and do all the transactions that we discussed above. Okay. So slide 10, where to open an account. 1, you could go to the bank, any branch of the bank you want. You could open your account with a credit union. You could open an account online. You go to a bank's website. For example, in Canada, we have Royal Bank, we have CIBC, we have TD. You could go to their websites and you open an account if you have all the requirements that we discussed above. And then after you open an account, a debit card or Visa debit will be issued if you wish to have them. Because there are some people who be like, you know what, I don't want a Visa debit, I don't want a debit card. I'll just be coming to the branch and do my banking here. Especially, we've seen this so many times with the elderly, the seniors. They want to come to the branch and talk to people, so they don't want to do everything at the ATM or online. So they would opt and say, oh no, I don't want a debit card, but it's entirely up to you. And then the uses of the debit or Visa debit. Now you have your account, you've opened it, you've signed your documents, you're now ready to go. So what are the uses of the Visa debit you have, the Visa debit card, or the debit card that you have, or the account that you have? So the account that you have, you may use it for payroll, because they say you've gotten a job and your employer does direct deposit, they'll need an account. So you give them an account. So you may use it for payroll, and then they'll be depositing money directly into your bank. The debit card, you could use it at the ATM to withdraw your money if you want, and to make deposits, and also pay bills at the ATM. You could use your account to transfer funds. They say locally, internationally. Internationally, it could be wire transfers. Let's say right now I'm in Canada and maybe I want to send to Danny some money. I would do an international wire transfer. And then you could do e-transfers. And then you could also transfer money between your accounts. Maybe you have 2 accounts, a savings account and a checking. You could transfer from checking to saving, from saving to checking. And also purchase in store and point of sale. Let's say you have your debit card, you have gone to a grocery store. You could use it for purchasing your groceries, swipe, you pay for your groceries. You could use it for pre-authorized payment, the account that you have. Let's say you have a bill that you're paying, your phone bill. So you could ask your phone company that they take money from your account to put towards your phone bill, let's say every month or every 2 weeks. It totally depends, up to you. And then also you could use it for check deposit. Nowadays you can deposit your checks on your phone. So you get your check, that's convenience. You get your check, take a picture and deposit your money into your account. And then also online, you could use a Visa debit online, especially I've had some people who don't have, let's say, good credit. They would rather have a Visa debit because then they could use it to purchase stuff online because they don't have a Visa. So maybe you want, like Watchi, you want to buy shoes. You could use your Visa debit and buy shoes online, or anything that you want online. So basically that's all for today for retail banking. It was just an introduction. So we hope to go deeper and deeper into each and everything that we have discussed here in our next session. But for now, this is it. Thank you so much for listening. And if you have any questions, I'm glad to take any questions.
So the question around life insurance, and I mentioned life insurance, right? And when you meet with insurance salespeople, they're going to try to sell you the most of the most of the most. So what I've been advised is that life insurance depends on your age, right? And so if you are a younger person, so you are not close to retirement, just getting basic life insurance is typically fine. You can get higher returns on your money investing whatever you would pay for the additional insurance into something else, right? So like the returns for the S&P are about 8%, like on average. And for life insurance, like you're not getting that type of return. So I would say have at least basic life insurance. You don't necessarily need, if you're in like your 20s, your 30s, even your early 40s, you don't necessarily need, at least that's what I've been advised, the most complex of life insurance policies. And then for Linda's comment about opening the paint shop. So as early as possible in the stage of your business, you want to stop commingling your personal money with your business revenue, right? Because for tax purposes, it makes it a nightmare when you have to reconcile stuff, right? And so when I first started my company, when the revenues were unpredictable, and granted, like we're still technically a baby business, we're a baby business that did a ton, so we did 6 figures in our first 6 months of being in business, right? But when I first started and I didn't have an understanding of cash flow, I had Aslo, and Aslo doesn't exist anymore, but it was an online bank. Most of my clients paid me through like ACH or direct deposit, so I wasn't depositing a ton of cash. And so having a retail branch didn't necessarily matter to me. Like Maureen talked about, I had a debit card for like a Visa debit card for my business account. So whatever transactions I needed to make, I was still able to. And the benefit of the online account is that there were no minimum balances, there were no fees for it. But some of the downsides is there were no ATMs, right? There were no branches. I couldn't go in to talk to anyone. And I ultimately ended up leaving them because of the convenience factor. They were a newer bank at the time, and sometimes we ordered products from overseas. And so we would always get fraud alerts because they didn't recognize the bank, which is like one of the perks of going with an established retail bank. I currently bank for business at Wells Fargo. And I don't know if I would recommend it or not, but if at all possible, stop commingling your personal funds with your business funds.
Correct.
Thank you so much. Thank you so much, Watchen. Any other questions? Let me see if we have any in the chat. We have another question for Watchen. Let me see. Okay, so this question is, how important is having a mentor to your financial planning?
More important than you could ever imagine. And one of the things that I say to people is like, stop asking people for advice who've never done it, right? So if you are someone who doesn't come from a background of like financial literacy, which a lot of us are, like, I'm like that. And my parents have master's degrees and we still didn't talk about money for real. Like I'm just trying to re-educate myself because of my business and because of how I have to handle that revenue. But I think, like Maureen mentioned, you can start at a bank, but if you know somebody who handles money well, who manages money well, I think it's helpful to be having those conversations on a regular basis, because you could learn maybe some strategies or some tactics that they're using to save more money, grow their wealth. And if you aren't having those conversations on a regular basis, it's going to be really hard to actually build wealth that lasts for you and your family. And so I think it's extremely important. And if you don't want to do it at a bank because you feel like they might be a little bit biased because they want your business, there are clubs that you can join. YouTube University is a great place to go, right? Like there are tons of videos. There are classes everywhere. And for some, it might be worth the financial investment to learn. Like, don't spend all your money, but there are classes and courses that you can take to educate yourself. One of the books that I read that's been phenomenal, it's called I Will Teach You to Be Rich by Ramit Shah. And it was there that I realized, although I had been putting money in my 401k, I never actually invested the money. So like I had a traditional IRA, sorry, not my 401k, a traditional IRA that was separate from it. And I had been depositing money every month, but I had never actually did the final step of choosing a fund to invest the money into. So for 3 years, I was depositing every month, but it was just sitting there it was a 0.01 interest rate, right? So no money was being made. And had I not read the book and had some conversations, I never would have known.
What is the first step? What is the first step that you could give everyone to take away to in terms of getting started with financial planning and retail banking? What would be the first step?
So the first step, I would advise anyone who wants to start their financial planning, their investment, as in compliance with the Canadian laws. I'll just say an introduction part of it because I'm not certified in financial planning. So, but what you need to do is get into the branch or go on the phone, identify the bank you want, that you wish to do business with. When I say business with, I don't mean you're going to deposit your money, lots of money there or whatever, but it's that you need to start your banking with. If you identify, for example, Royal Bank, call or visit the branch and ask, let's say for the manager or an account manager, and tell them exactly what you need to do. So if it is financial planning, or if it's investing, or you want a loan, or you want to open an account, they'll advise you on who exactly to see and what are the first steps you need to do. But for financial planning, definitely it's getting out and getting to the account manager or to the branch or to the phone and talk to someone. Mm-hmm. And then you take it from there.
One more question in the chat.
Oh, you see one more? Okay.
Well, it said, thank you so much for this session. In terms of checking versus savings, I'd like to know if you are moving money into your savings from the beginning or if you have a certain goal for checking before you start putting money into savings. So Maureen, do you want to answer that first?
Okay, so we discussed two questions. We discussed two accounts, a checking account and a savings account. I said there are different types of accounts, but because we discussed two, it depends. Most people have two accounts, which is checking and saving. So mostly they use checking account, and saving, they usually put Forever Bank, they have a minimum. Mostly they have, okay, you shouldn't take out money. It should be one transaction a month. It's basically like to help you save, but at the low key, because you don't have lots of money to put away in maybe mutual fund or all these other big investments. So this other saving, it's kind of helping you to save, because they're like, don't take out the money, you give you one transaction a month, but you can transfer money though, from the checking to the saving, or from the savings to the checking. It can basically work just like any other account. The difference basically is just the name and how much you want to save and what risks you want to take.
So Jess, I would think about your savings account, your checking account as your operational account, right? You are operating out of that specific account. So the way that I have mine set up, and I have different savings accounts for different things, right? So my life savings, right? Not like for the rest of my life, but the account that I have for emergencies, for savings, is not the same as the account that I have for my house fund. Those are two separate savings accounts. So the way that I have it set up, all of my money from different sources. So my paychecks for people who are not business owners, your paycheck gets deposited into your into your checking account, right? Because your checking account is what you're going to be writing checks for your bills, for going out, for whatever, right? So everything gets dumped there. And then I have it set up automatically that at certain times of the month, fixed amounts get automatically withdrawn from my checking account and deposited into the various savings accounts, right? So I operate day to day out of my checking. So when I need to pay my rent, when I need to pay my renter's insurance, if we have to pay the car note, all that stuff, that comes out of checking, right? But my vacation money is automatically debited and sent to my vacation account because I'm not going on vacation this month, right? And then when I'm ready to go on vacation, I will transfer that money back into my checking, or if there's a card for that savings account, I will then use that card to pay specifically for my vacation. So your checking account is what you operate out of, and your savings accounts are for long-term and short-term savings. You should not have, though, like like a crazy amount in a regular savings account because the interest rates on most savings accounts is not high enough, right? And so save for something specific or for life things, but anything in excess of that, you should really be thinking about investing and not saving. Does that make sense?
It does. Thank you. Yeah, I've never thought of it that way. And then too, I'm sure Watchen, you can answer this, or Maureen, you can answer this. So we are able to have more than one savings account, because I've always just had and been presented with one checking account and then one savings account option, and that's all that the bank usually offers.
Yep.
Yeah. So yeah, thank you for the question. In the context of Royal Bank, you could actually have two savings accounts. And the first saving, which would be called the primary saving, you could use it just for anything, just like an everyday account. And then the other one, you would use it, let's say, to put away, you know, a little bit of money. And it's not like an everyday account that you use. For me, I find with Royal Bank, these accounts are pretty like almost the same, but they serve different purposes to you. Mm-hmm. Because you could be like, this is my primary account and it is savings account. The primary account, I mean, the one you use daily, like for all transactions that you want to do. But it could be a savings account. And you could be like, this is my checking account, but it's the account that I'm going to put away a little bit, you know, in it every day or every month. So according to Royal Bank, there's nothing that is so different. And I want to show you, if you walk into the branch and you say, oh, I want to open a savings account, they're going to ask you, what do you want to use it for? Mm-hmm. Mm-hmm. And then they are going to advise you accordingly, you know? So it doesn't really matter which account you have, whether checking or saving. I think these are just names. You could just identify exactly what you want to use the accounts for, and an account manager will tell you which one is good for you. For my case, I have all sorts of accounts, but for my checking is my primary. So even when I go to the ATM, by the way, what I'm forgetting to say is if you have two savings accounts and you're using one as your primary, it could be kind of confusing if you're at the ATM, because they are all showing you their savings unless you know the numbers, because we don't tell you that. We don't tell you that, oh, this is number 055 or this is number 066. So unless you're keen about that, that's when you will know which saving are you using for at that particular time at the ATM. Otherwise, it may be confusing. So I would suggest you have two accounts, a checking and saving, just for your peace of mind, that if you want to do your transactions, you know exactly how to move your money and what you're using it for and which account you're using.
And I have a slightly different perspective, Jessica, and I realized that I didn't answer your other question. So for me, my checking account, there's just a number that I don't let it go below. There's not a money that I'm growing towards. So like when I first, because I used to be extremely irresponsible with money, like paying overdraft fees all the time because I forgot that this bill was coming this place and whatever. So now when my checking account hits a certain number, all spending stops. Unless it's an emergency, like I don't spend anymore, right? And it started out as like $100. And even then I was like, oh my God. But then as I've gotten more like responsible, I've been able to increase that minimum balance. I also think that when you're looking at savings accounts, the reason that you're putting the money in the savings accounts is because you want it to grow. So the number one thing that I look at savings accounts is, what is the interest rate? What is the interest rate of this money that I'm going to have sitting in this account, and which one's going to be the best? And that's how I've chosen. So I have a Marcus by Goldman Sachs savings account. And that savings account is specifically for my house, like house fund. So I put money in Marcus every 2 weeks, and because the rate of return on that specific account was higher than like what I was getting through my Bank of America account had I opened a savings to match the checking that I had with them, the Marcus, after research, just had better returns. And then for my life expenses and all that stuff, I have a Capital One 360 account, because that one, and that's money for something else. But the difference for checking and savings, you get a fixed amount of transactions for most savings accounts that you can do a month, because it's not supposed to be an in and out account. Whereas in checking, you have more opportunities to do transactions because they expect that to be your operational account. So your savings accounts should not have a ton of activity on there. If you find that it does, it's not growing in the way that it should be. And so you should move that to a checking account and not use it as your savings.